stick. When I got go purr, she just told me that I ain't. And they be running, chillin' by a lane. So they play out with our shit on so much TV make. Go long distance, cause I should be in the stick. When I got go purr, she just told me that I ain't.
Sorry. I just had to put you guys on to one of the hardest songs to drop this year. In Geneva, just chilling by a lake. You know, she's like, how much do you make? And today I'm going to teach you guys how to make a bunch of bread using this one simple fucking bottle. Okay, so this is something that, again, it's not going to happen every single day, but I mean, why the fuck did you click on the video? Because you guys are a percolator, okay? So let's lock in. Why did you guys click on this video? Because you guys want a simple fucking strategy that shows up every now and then within the market that you guys can execute on. So again, I have a bunch of other videos going over a whole bunch of confluences that I'm going to mention in this video. So if you guys haven't seen it yet, watch the bootcamp, watch the trading transformation, because both of those, okay, are going to cover all of the concepts that I talk about in here, okay? And some of the concepts that I cover in the bootcamp, some of the concepts that I cover in the trading transformation weren't covered in the bootcamp, and that is going to apply to this video. So please watch both of those. I know it's super long, but it's going to give you guys the best, foundation in terms of trading and confluences to be able to just take your own trades. So with that being said, let's get right into this. This is just going to be a super easy strategy that you guys can implement today that will give you guys really high quality setups. So without further ado, we're just going to break this down step by step, okay? And we're literally going to write this out for you guys step by step. So first things first, what are we looking for? Okay, we're going to be looking for high time frame liquidity sweep. Okay, so that's either going to be on the 1 hour or the 4 hour. And with this, okay, and again, this isn't necessarily exactly how I trade, okay? For most of you guys are probably gonna be like, well, this is different than you explained in the trade recap. Yeah, I know, I'm just trying to make like a good informative video to give you guys a strategy that may work for you. Again, if you guys have seen any of my videos, you guys will know that, you know, there's not necessarily one strategy that fits every single person. You have to choose a strategy that works for you. And luckily for me, I've done the time for you guys where I've traded with several different strategies over and 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 over again. So I have a bunch of strategies in my brain, okay? And this one works pretty fucking well. And if you guys watched that market recap from this week or last week, depending on when this video gets out to you guys will see that this was like one of the mock trades that we put together. Okay, so again, don't freak out if you don't see this get implemented with every single trade recap. I know some of you guys are still going to do that, but it is what it is, okay? This is just a edge, no pre-market edge, no goon, no jerk max, whatever you weirdos do nowadays, but you know what I'm saying, okay? This is just going to be a super solid strategy that can give you guys high probability setup. So the first thing that we're looking for is a high time frame liquidity sweep. And again, does this necessarily, do we need to have a daily bias with this? For me, not necessarily, okay, with this specific strategy. We don't need to be looking at the high time frames. All that we're looking for is high time frame liquidity sweep, and that's either going to be on the 1 hour or the 4 hour. Here, we can specify that. 1 hour or the 4 hour. And then next, we're going to be looking for low, time frame SMT, okay? So that's either going to be on the 5 minute or the 15 minute, okay? And then from there, whichever one is the lagging index, okay? So, and we'll identify this in the chart. This is going to be a relatively long video, probably like 20 minutes, so lock the fucking strap in your seatbelts and time to get horny, okay? Low time frame SMT on either the 5 minute or the 15 minute. I would prefer not to go any lower than the 5 minute, like 1 minute SMT, pretty freaking weak, okay? And then from there, we're going to go to the lagging index. And then we are going to look for break of structure or inverse fair value gap, okay? And then from there, this is optional, okay? This is just a little bit more so on the safer side, okay? We can look for, I call this like third confluence, but it's really just fair value gap, order block, breaker block, equilibrium. Okay, and then from there, we can enter, okay? And this is optional. So let's find examples of this. I'm going to bring up, I'll give you guys a chance to screenshot this for a second. All right, cool. Now let's go into that example. Okay, because there was a pretty freaking good example of it this week. I'm trying to remember when it was. It was either on Wednesday. I think it was on Wednesday. Maybe not. Let's go to NASDAQ. Where's Wednesday? Wednesday. In Geneva, and I'm chilling by a lake. I don't think it was on Wednesday. Tuesday then. Tuesday. Hello. My name's Tuesday. Do you even love me? I'm just a little wormy. Yeah. I think. Maybe it was even on Monday, bro. In Geneva, and I'm chilling by a lake. It wasn't on Tuesday. It was on Monday. Sorry. Yes! Wait, right? Yes, it was. Here we go. Finally. Okay. Oi, oi. In Geneva, and I'm chilling by a lake. Okay, so. First things first, Amaryllis. What are we looking for? We're looking for a high time frame liquidity sweep. Come on, bro. And this can be on really any of the indexes. Okay, so in this case, we have, boom, we have a 4-hour low right here. This gets swept. Along with that, we have this 4-hour low that gets swept. Did we sweep out this low? No. Okay, so that's on NASDAQ. Then on ES, is this one the Monday one? Yeah. On ES, boom, we see high time frame liquidity sweep. Liquidity. Okay, boom, we sweep out these lows. We also sweep out these lows. Boom, on the hourly. Okay, so boom, we see that we sweep out high time frame liquidity. From there, what are we looking for? We're going to be looking for lower time frame SMT divergence. Okay, so that's either going to be on the 5-minute or the 15-minute. If I remember correctly, this one was on the 5-minute. And something else that's pretty helpful is to be looking to only look for this to happen after 950, just because 950 is when the macro starts. So from 950 and beyond, I rarely will ever take a trade before 950, but again, you guys can do this however you would like. Okay, we're gonna get rid of this Wednesday line so I don't freak out. And then we're gonna go ahead and put on this 950 line. Boom. Okay, so here we are. If I remember this correctly, we have, come on, bro. Come on, bro. On NASDAQ, we come down, we sweep out liquidity. Okay, we make a low right here and then a higher low right here. So we made a low at 10.15 and then we make a higher low at 10.55. And then if we go to ES, we made a low right here, and then we made a lower low right here at 10.55. Okay, so boom, a low at 10.15, lower low at 10.55. So which one is the lagging index? We go to the lagging index. It's going to be ES. Okay, so we go to this one. Boom. Prior to sweeping high time frame liquidity, right? We sweep out liquidity. When do we make the SMT divergence? Right here. Okay, so then what can we do? We can scale down to the lower time frame. Oh, damn, I wish I still had that freaking drawing. Whatever. We scale down to the lower time frame. For me, that's going to be the 1-minute time frame. Again, now what are we looking for? we're looking for either a break of structure or an inverse fair value gap. Okay, so let's see. Let's look. Okay, so we make the SMT right here. Boom, on this up candle. When that up candle gets created, what else do we get? We get a break of structure to the upside, along with, boom, inverse fair value gap right here with this candle, and, okay, nope, not one right there. Cool. Okay, we make an inverse fair value gap. Okay, so boom, then, right, we could either just purely enter off this, or optional, safe route, we have a fair value gap right here. On top of that, this down candle turns into an order block because technically this is a sweep, then a break. Okay, this blue candle right here is a breaker block. Literally, this entire area is just high confluence price range to look for fucking longs. So from there, depending on whatever you guys take the trade off of, whether it's equilibrium, literally every single one of our retracement tools or our third confluences got hit. We have a fair value gap, we have a order cock, we have a breaker block, and we have equilibrium getting hit. Let's say we enter off this bullish candle. Okay, we can put our stops underneath here. Boom, plain and simple. We can target low time frame draws on liquidity. That's a 1 to 5 risk to reward ratio. If we want to play it even safer, boom, we can target even lower time frame liquidity. These highs right here, boom, gets hit. 1 to 3.6 risk to reward ratio. Plain and simple. Okay, let's go find more examples of this. This might be a little bit difficult because, again, that was like one that I already knew was just said in there, but I have used this strategy not necessarily like me just like knowing like, hey, these are the step-by-steps. That's the thing. You guys shouldn't necessarily always have like a step-by-step freaking program that you guys are running on. The main thing that you guys should have is just all of your confluences in your head so that you guys have a tool for every problem that arises, okay? Like, let's think, again, I love comparing trading to basketball because it's super fucking similar. It's a skill set that takes a really long time to get professional at, and there's just so many similarities with this. Okay, so let's say fucking get up. This is the defender. Okay, boom, all right? Let's say I'm dribbling the ball right here. Okay, I hit it between the legs, okay? Let's say that between the legs is me seeing a break of structure. The shit doesn't fucking move. The defender doesn't move, right? What happens if I hit him with a hezi? That shit doesn't work, okay? Let's say there wasn't even a break of structure, meaning, boom, the between the legs doesn't work. That's one of our confluences, didn't fucking work. Hesitation, oh, he's still not fucking moving, okay? But let's say I see liquidity sweep, boom, Allen Iverson crossover, yank work, okay? He's trying to recover. I dribble down more, okay? He's trying to catch up, snatch back, boom, SMT divergence, fuck, now he's back in front of me. I don't know what I'm gonna do, okay? We're back in it. Now, what do we see after the SMT divergence? Boom, break of structure, boom, between the legs, blow by, grapple, layup off of the third confluence, which is the fair value gap, okay? We need an arsenal of moves and tools that can help us navigate our defender, which is the market, okay? The market is permanently trying to defend us. It has clamps on Hall of Fame, okay? Because we're a brown shirt my player, and the market has clamps on Hall of Fame. We need to get ankle breaker on Hall of Fame, flashy passer on Hall of Fame, posterizer on Hall of Fame. We need to upgrade our my player. How do we do that? By practicing these confluences and having these confluences and understanding them in depth. Okay, that's why I advise you guys to watch the boot camp, to do all of those things, watch the trading transformation, because as you guys get better at identifying these confluences, seeing how the market reacts off of them, seeing how your defender reacts off of them, you're going to get better and better at predicting where price wants to go. And that's our main goal, making a fucking bucket, cashing in a positive winning trading day. That is our main goal. Wow, out of breath, boys. But anyways, let's try and find another example of this. Oh, wait, yeah, no, this was another example. Thursday, wait, July 4th? What the fuck's going on? Wait, no, it's this one. Boom. Look, see, this is a perfect fucking example. Watch this, baby food, babyface Ray. Watch this, Bronny. I know you just got drafted. I'm gonna clap your cheeks. Okay, so on Wednesday's case, what are we looking for? We're looking for a high time frame liquidity sweep. Liquidity. Okay, we get it on both. Okay, we get liquidity sweep on ES. We don't quite get down to this, and this is going to be helpful later on. Okay, and this is during market open too, just so you know I'm not fucking like reaching in my butthole, cherry picking dookies out of my ass. Okay, and let me just identify this low just to help people visualize this shit a little bit more. In Geneva, and I'm chilling by a lake. Okay, so ES comes down. We see high time frame liquidity sweeps on both, right? On the hourly time frame, we sweep out high time frame liquidity. What are we looking for next? We're looking for an SMT divergence. Well, I can already tell you that I can see one on still the hourly time frame. Why? Because on ES, we only swept out this low. Okay, let's go back to ES, right? We only swept out this low. Okay, so we have this low right here, and then we make a higher low up here versus on NASDAQ. Come on, man. We have this low right here, and then we have a lower low right here. So, what is the lagging index? It's going to be gas pack. NASDAQ, smoking on the gas pack. Okay, what do we do from there? Scale down. Okay, so we have the high time frame liquidity sweep. What else do we have? Lower time frame, or in this case, like same time frame, SMT divergence. Okay, if it's higher time frame, fuck it, even better. Higher time frame holds higher power. Okay, from there, what are we looking for? We're looking for break of structure or inverse for value gap. Okay, let me mark out 950. Pretty ugly price action after all of that happened, though. In this case, this would have been like, within this area would have been the best time to take the trade, but we can still go through the motions. Okay, so what are we looking for after all of that? We're looking for a break of structure. When do we get it? Boom. Right here. This is happening during pre-market. So again, would I have taken this trade? Probably not, but is this still a good example of this strategy working? Yes. Okay, so boom, we get a break of structure. Okay, we can either enter off of that, right, because that fifth step is optional. Stops underneath the break. Where can we target? Boom, low time frame draws on liquidity, smack work. Okay. Or we enter off of inverse for value gap. Okay. We had this previous bearish for value gap right here. Got filled, respected, and then boom, disrespected. Okay. Or we wait and then we see boom, this big ass candle. When we see a big ass candle like this, I'm probably going to want to wait for a better entry. Price comes down, fills in this fair value gap. Okay, we get a rejection up. Maybe we enter off that, stops underneath here, and then target, boom, this high time for liquidity. But let's say that we want to wait until 950 because that's what TJR does. Because again, I probably wouldn't have taken this trade. So what are we going to be looking for? We're still going to be looking for either inverse fair value gap, break of structure to the upside, one of those things. Okay, and for me, I would probably want to see like equilibrium after this extension get hit. So I'll be looking at, boom, the bottom of this range up to the high of this. It looks like some news came out here. What is this? At 10? Yeah, that would make sense. Okay, we push down into equilibrium. Cool. So now I'm back and I'm ready to start looking for breaks of structure. Okay, boom, we get a break of structure right here. Again, we very well can enter off this. Long John Silver's, okay, stop underneath this low, okay, take profit. We would have to be deep in our fucking bag. I'm pretty sure this is past all-time highs, so somewhere up here. Okay, whatever, we're just showing examples of entries. Or we wait for that third confluence because, again, this is kind of scary looking, okay, and price action's looking like shit. So odds that we're just purely going to enter off this, not that high, okay? So boom, let's say we don't enter off this. Price comes down, okay, we take out these lows. Okay, thank goodness we didn't enter. Okay, what are we waiting for now? Again, break of structure to the upside, invalidation of a fair value gap. Okay, we get that break of structure to the upside, boom, on this candle right here. Boom, okay, again, let's say we're waiting for that third confluence. Oh, boom, we get a sweepy right back down. Nothing. Okay, still waiting for, we get back underneath these lows. Still waiting for break of structure or invalidation of a fair value gap. When do we finally get an invalidation of a bearish fair value gap? Boom, right here on this candlestick. And then when do we finally get, at like bare minimum, one of our confluences getting hit? It would be boom, price coming into this equilibrium, giving this tiny ass doji to the upside. Again, is this necessarily the best entry? Now we're getting into freaking like 1030 territory. I'll probably be off the charts by then. Okay, stop underneath this low, or even this low all the way down here. And then again, take profit. We're at all-time highs, so I'll just use like a fib extension, something like that to mark this out. Okay, or, right, we could just say, fuck it, I want to wait even longer. Okay, we finally get another break of structure back to the upside. Fair value gap gets filled. Right here, we see, boom, gets filled, rejection, enter off that, stops underneath the fair value gap, or underneath these lows, or underneath all these lows. Regardless, price ends up moving higher and higher. Okay, let's do like a, let's see if we got an entry for today, because today was Friday and I didn't even review this, so might as well, right? See if we got this entry strategy that I talked about today. Oh, today was NFP, but I mean, regardless, we can still draft it up. Sometimes news be giving good entries. Okay, let's go to the 4 hour. Boom, looks like we actually did. Okay, so we have a high time frame liquidity sweep right here. 4 hour sweep. On NASDAQ, boom, we have an SMT divergence, SMT, right? ES swept these lows. NASDAQ didn't. We have, boom, these lows right here, higher lows. ES, boom, we did sweep out these lows, okay? So we're going to be focused on ES, right? And boom, on the liquidity sweep side of things, we already have the liquidity sweep and we have the SMT divergence, so we can scale on in. Okay, we're gonna be waiting until 9:50. Okay, we get a break of structure right here. Cool. Could have very well just entered purely based off that. Doesn't look like it would have gone in our direction. Stops underneath here. I mean, shit. If you wanted to take profit off that, that's a 1-to-1 risk to reward ratio. If you wanted to take profit off these highs right here, it's a 1 to 1.5. Put it at these highs right here, that's a 1 to 2. I mean, shit. All the way up to these highs, that's a 1 to 2.75. It's a pretty fucking good trade. Okay, but if you were a little bit greedy and didn't take any profits based off of that, then probably would have got beamed and ended up getting stopped out. But after all that, we come back down, we sweep out liquidity again. Okay, then what do we get? Boom, break of structure. And again, this is assuming that we're purely just entering just off break of structure. If we wanted to wait for that third confluence, we would have never got the third confluence, so we wouldn't have even entered off of this. Something to think about. That's why we have that optional third confluence, because it keeps us a little bit safe. Okay, price comes back down, we sweep out liquidity, then what? Boom, break of structure. Let's say we do wait for that third confluence and we didn't enter off that. Boom, what do we have? Bullish for value gap, filled, rejection, long John Silvers. Make work. Okay, stops underneath the bullish for value gap. Where can we target? Previous highs, right here. Even lower time frame highs right here. Lower time frame highs right here. High time frame highs up here. I mean, shit, man. I just showed you a bunch of really fucking good examples of how this would have worked, and everybody was having trouble trading this week, and we just broke down how this one simple strategy could have made you guys some money. So, again, hopefully this helped some of you guys out. Okay, again, go back. Damn, I look good. Go back over those step-by-steps. Okay, what are we going to be looking for? High time frame liquidity sweep, SMT divergence, whether it's on the 1 hour, 15 minute, or the 5 minute. Okay, from there, scale down to the 1 minute time frame, break of structure, inverse fair value gap. You can have a higher risk entry and enter purely just based off that. But based on the back testing that we just did for this little bit of time, we can tell that, hey, it's probably for the best if we wait for that third confluence. Wait for the third confluence, boom, enter off that bitch. We literally just dissected this week's really difficult trading week that everybody was having problems with and fucking crushed it. So, boom. There you go. Just wanted to get on here. I'm right back on the YouTube grind. I want to keep putting out these good ass videos for you guys, giving you guys different strategies and different things like motivation. I'll probably make a discipline video after this and give you guys some tips and tricks on how you guys can fix your psychology. But yeah, man, with that being said, I love and appreciate all of you guys. Mastermind 4.0 is coming right around the corner, by the way. If you guys haven't signed up for that, I mean, you guys can't even sign up for it yet, so what am I even saying? Yeah, stay tuned for that coming relatively soon. I'm not really sure when, as you guys can tell. Oh, well, my eye bags have gone down a little bit because I've been getting good rest and also because the light is helping me, but look how bad those dark shadows are. It is what it is, man. I'm losing sleep, trying to work hard for my mastermind students and trying to work hard for you guys on YouTube. But with that being said, I love and appreciate you guys. If you guys haven't subbed yet, do it. Like, fucking subscribe. I'll catch you boys. Peace out.